What's up, dudes? It's your boy Lube of Wall Street. Again, my channel is about serious investing. Today I am going to analyze the cryptocurrency crashes which also dragged down other assets with a simple, clear framework. And provide my current views on where different asset classes are at right now, including cryptocurrencies, stocks and commodities. First, let's start with a framework on how to value financial assets. It is nothing fancy like complex DCF models on Wall Street, most of which are trash in my opinion. It is one simple function. Fundamental discounted by risk premium. Asset prices are positively related to fundamental and negatively related to risk premium. Fundamental is some sort of complex sum of all the future cash flows or values the asset will generate, adjusted by risks. Put in simple terms, fundamental is a function of growth or value potentials and risks associated with these potentials. For example, the growth or value potential for cryptocurrencies would include the potential disruptive values they can create in their storehold of wealth or alternative currency potentials. And the risk for cryptocurrencies would include regulation risks or threat of quantum computing. Another example is stocks. The growth potential for stocks would be a function of their product competitiveness, market demand, and company growth strategy. And the risk for stock would include execution risks, market risks, and industry risks. Risk premium by definition is the compensation usually asset buyers seek from the sellers to compensate for the risk they are taking owning an asset, such as Tesla stock or Bitcoin. The level of risk premium is mostly determined by the supply and demand forces of market participants. Risk premium is impacted by yield of less risky assets such as the treasury yield. The higher the treasury yield is, the higher the incentive for people to hold treasury versus risky assets, thus buyer will demand a higher risk premium which will lower prices of risky assets. However, given zero to low interest rate is here to stay. I believe risk premium is mostly related to the second factor, market sentiment at the moment. The higher the sentiment is, the lower the risk premium is. For example, when you have a lot of excess liquidity in the market and everyone claims Bitcoin is going to the moon, sentiment is high and risk premium is low. However, like today when China says, "Fuck you crypto," days after Elon's market manipulating tweets, paper hands are gonna panic sell, and obviously sentiment turns lower and risk premium spikes. To a large extent, sentiment reflect market expectation or the fundamentals that are reflected in current market prices. Given all said above, the best investment decision you can make is to buy the asset with good fundamental but bad sentiment. And the worst investment decision you can make is to buy asset with bad fundamental but inflated sentiment. To quickly share my personal views on recent events and market reaction related to cryptocurrency. Fundamentally, the negative impact to Bitcoin or other cryptocurrency is moderate, not too significant. And the fundamental impact to other markets such as the stocks or commodities are very minimal. For cryptos, there are two pieces of fundamental developments, namely the incremental environment concerns emerged from Elon's tweet and China's regulatory crackdown to further restrict crypto activities in China. On the environmental front, the concerns there is definitely not new. There are a few options to meaningfully increase crypto energy efficiency, and some of the efforts are already underway. Some also argue that crypto energy usage could also help accelerate renewable adoption. But personally I do not expect a lot of meaningful positive developments in the near term while the concerns from various agencies persist. On the regulation front, I think the crackdown is mostly an effort by China to bolster its own digital yuan which China has been piloting for more than a year. As a result, it is not that representative of the views of other agencies and central banks. While the fundamental impacts to different cryptocurrencies are different due to different use cases, but I think the impact to the overall group is moderate, but not significant. Again, I am a rookie rather than a professional in the crypto market, so don't put too much weight on my views above. Hopefully we will invite a professional guest to join our channel soon. In sentiment space, for cryptocurrencies, clearly a significant blow to an albeit very high sentiment to start with. For other assets, especially commodities, it is a somewhat meaningful sentiment hit on a very minimal fundamental impact. The bottom line is that as investors, it is very important to have a systematic process of generating fundamental versus sentiment gauges for different investments. The chart above shows how my gauges on different markets changed today pre and post the news and market actions today. While I wouldn't panic selling the cryptocurrencies, the commodity group continues to look attractive. I will save the deep dive of the current US stock market for future discussions. That's it for today. Hope these are helpful. If you like what you hear, please click the subscribe button. Have a nice day, folks.